Okay, before we jump in, just a quick heads up. This is all for educational purposes, okay? It is not, and I repeat, not financial advice. You should always, always talk to your own financial advisor before making any big investment decisions.
All right, let's just get straight to it. Your portfolio is probably looking a little scary right now, isn't it? The markets are reacting to some pretty intense headlines from around the world, and honestly, it feels like chaos. But what if I told you there's a playbook for this? A clear, step-by-step guide for moments exactly like this one. Let's break it down.
So, you've opened your trading app and it's just a sea of red. I get it. Your gut reaction is probably screaming, sell everything and stop the pain. But hold on. What if these moments of maximum fear are precisely when fortunes are made? The real question you've got to ask yourself is this. Is this a devastating crash we should be running from, or is this the buying opportunity of a generation?
And look, your fears are not misplaced. Waking up to see the gift NIFTY, which is basically the first clue we get about where our market will open, down 500 or 600 points, yeah, that's enough to give any investor a heart attack. This isn't just some small dip, it's a massive signal that something is seriously wrong on the global stage. But before we can figure out our next move, we first have to understand what's actually causing all this turbulence.
This panic you're seeing, it's not random. The fire that's burning up our stock screens is being fueled by a geopolitical crisis happening thousands of miles away. So let's trace the path. Let's see exactly how that conflict connects, like a set of falling dominoes, directly to your portfolio. It all starts in one tiny but incredibly important place.
This right here, this is the Strait of Hormuz. I want you to think of it like the main artery for the entire global economy's energy supply. A staggering 1/5, 20% of the whole world's oil and natural gas has to squeeze through this one narrow channel. So you can imagine if this artery gets clogged, the entire system feels the pain, and it feels it fast.
And here's just how fast those dominoes can fall. First, you get the geopolitical flashpoint. In response, Iran could block the straits, trapping hundreds of ships. Instantly, Qatar has to halt its production. What happens next? European gas prices could jump 50% overnight. Then crude oil surges, with some experts warning it could shoot up to $150 a barrel. And finally, all of that leads to skyrocketing shipping and insurance costs, which creates a brand new wave of global inflation. Every single step in this chain brings the crisis closer and closer to your wallet.
Okay, so that's the global storm. But how exactly does this hurricane make landfall here in India? Well, for us, it's a triple threat. It hits us in three critical ways, creating what you could call a macroeconomic hurricane for our economy, which, as you know, is heavily dependent on imports.
Now this slide right here, this shows our biggest vulnerability. It is our Achilles heel. India imports a massive 85% of the crude oil it needs. And to make matters worse, we only have about 8 weeks of reserves stored up. So any major disruption to supply or a big spike in price creates a triple whammy for India. You get higher inflation for all of us, a weaker rupee, and of course lower profits for our companies. So as an investor, this is where you need to be smart. You've got to know where to find shelter in this storm. In the red zone, you've got the obvious victims of high oil prices, right? Aviation, paints, tires, chemicals. That makes sense. But notice IT services is also in that red zone. Now why is that? It's not directly hit by oil, but it's already facing this massive headwind from the whole AI revolution. So it's like a double whammy, making it a super risky place to be in a volatile market. Now on the flip side, in the green zone, we find our potential safe havens. Defense stocks might actually benefit from rising tensions. And then you have telecom and pharma. I like to call these bunker stocks, because think about it, people need their phones and their medicines no matter what the economy is doing.
Okay, so we've diagnosed the problem, we understand the risks. Now let's talk about the solution. This is not the time to panic. This is the time to be strategic. So here it is, your personal crisis investing playbook.
You see, right now there are two completely opposite stories fighting for control of the market. The bear case, the pessimistic view, says the war gets worse, oil hits $150, and foreign investors just pull their money out of emerging markets like ours. And when they sell the big, large-cap stocks first because they're the easiest to get rid of. But then you have the bull case. This story argues that these shocks are just temporary. It points to India's incredibly powerful domestic engine. I'm talking a 7.8% GDP growth rate, a strong manufacturing sector. The bull case says our economy is strong enough to absorb this shock and that this dip will end up being a fantastic entry point for smart investors.
So what's your game plan? What should you do right now? First, and I cannot possibly stress this enough, do not panic sell. History tells us that markets almost always recover from these kinds of geopolitical shocks within about 25 to 30 trading days. Second, keep those SIPs going. In fact, if you can, consider increasing them. You're buying great assets at a discount. Third, focus on quality large-cap stocks. Yes, they get hit hard when foreign investors sell, but they are always the first to bounce back because they are the biggest and most stable companies. Fourth, do a little portfolio house cleaning. Get rid of any companies with a lot of debt. And finally, please, avoid the classic retail investor mistake, the oil trap. That first big spike in oil stocks is driven by fear, and that fear premium, as they call it, can disappear just as fast as it appeared.
And what about gold? You know, the ultimate safe haven? Well, here's something interesting. Central banks in countries like China, India, and Turkey are buying it up like crazy right now. That tells you that they are losing a little bit of faith in paper currencies. So the smart way to think about gold is not as some speculative trade to get rich quick, but as insurance for your portfolio. A small allocation can be a powerful stabilizer when everything else is going haywire.
So, as we pull all these pieces together, we come right back to where we started. We come back to that one big question. How should you be looking at this moment? Is it a source of fear or is it a source of fortune? I want you to think back to 1991. India was in a brutal economic crisis. Things looked bleak, but the people who had the courage to invest when fear was at its absolute highest, well, they became a part of one of the greatest wealth creation stories of our time. Today, the world looks chaotic, for sure, but India's domestic story is still incredibly strong. You know, they say the best day to invest might have been in 1991, but the second best day, it could very well be today. It's a quote we've all heard a million times, but it has never, ever been more relevant than it is right now. The market is absolutely gripped by fear, and as the great Warren Buffett famously said, that is the exact moment when you should be greedy, when you should be strategic, and when you should be looking for value where everyone else only sees risk. You see, every major crisis in history has ended up being a massive transfer of wealth. It creates a whole new wave of millionaires from the ashes of panic. The historical precedent is crystal clear, and the strategies are pretty straightforward. So the only real question that's left is this: what will this crisis make of you?